Welcome to the Deep Dive. Today, we're going to be looking closely at Marvell Technology.
Ticker symbol MRVL.
Yeah, MRVL. That's right. To see if it might be a smart investment. We've got all sorts of research reports, market analyses, you name it. Basically, trying to get past the headlines and figure out
What's really going on?
exactly. So to kick things off, for those who maybe aren't super familiar with this world, what does Marvell actually do?
Well, think about all the data that's constantly flowing around the world, right? Like all the time.
Yeah, it's mind-boggling.
Marvell makes the chips that power a lot of the infrastructure behind that.
Oh,
So
yeah.
we're talking the data centers, networking gear, even some storage devices. This isn't like the chip in your phone or your laptop.
Right, more the behind-the-scenes
Yeah,
stuff.
exactly. This is high-performance computing stuff,
Yeah.
essential. But,
But not something most people think about.
right.
So they're kind of hidden, but super important for how the internet actually functions.
Exactly. And what's interesting is they don't just make generic chips. They specialize in what's called system-on-a-chip devices.
So being
Yeah, so keys. Exactly. So instead of having separate chips for processing memory and all these other functions, they combine everything into one powerful package.
Oh, so it's like an all-in-one solution.
Exactly. It's incredibly efficient and powerful, which is why they're so well regarded.
Okay, so we've got their specialty down. But what about the bigger picture? Where does Marvell fit within the entire semiconductor landscape?
They're considered a leader in several key areas, particularly data centers and networking. But they're also pushing hard into the AI chip market, which has huge growth potential.
AI chips, that's hot right now.
Absolutely. And they've got some strategic partnerships going too, including one with Amazon Web Services or AWS.
AWS.
That's a big deal.
It is. It gives them access to a massive cloud computing platform, so they're well connected in that world.
Interesting. So the tech seems solid, but what about the people behind the company who's steering the ship? Matt Murphy has been CEO since 2016. He's led them through some pretty turbulent times, global supply chain disruptions, trade wars, all sorts of external pressures. But he seems to have a clear focus on long-term growth.
Well, that's good to hear, especially in such a volatile industry. How does that long-term focus show up in their strategy?
One way is through their capital allocation strategy, basically how they decide to use their money.
Right, makes sense. So where are they putting their resources?
They've been investing heavily in research and development to stay ahead of the technology curve.
Makes sense. You got to innovate in this industry or you get left behind.
Exactly. And they're not afraid to make strategic acquisitions either, buying up other companies to expand their reach and capabilities.
So they're playing offense, not just defense. Always looking for ways to grow.
Exactly. And another interesting thing they've been doing is share buybacks.
Share buybacks. Can you explain what that means?
Sure. Basically, they've been buying back their own stock.
Oh, I see. Why would they do that? Doesn't that seem counterintuitive?
Well, there are a couple of reasons. It can signal that the company believes their stock is undervalued. Basically, they think it's a good deal.
Oh, interesting.
And second, it reduces the number of outstanding shares, which can actually increase earnings per share.
So it makes the stock more attractive to investors.
Exactly. It's a way of returning value to shareholders.
Ah, that makes sense. So it's a strategic financial move. Okay, so we've got this company with interesting tech, strong leadership, a growth-oriented approach. But what about the cold, hard numbers? How's their financial health looking?
Well, their market cap is over $100 billion, which is a lot of zeros. They're in the big leagues?
They are, but their earnings have been a bit up and down recently.
Oh, is that a red flag?
Not necessarily. It's partly due to the cyclical nature of the semiconductor industry.
Right, demand fluctuates, prices go up and down.
Exactly, it's a roller coaster ride.
Yeah.
But even with those swings, they've maintained a healthy cash position and haven't gone crazy with debt.
So they're managing the ups and downs responsibly.
Seems that way. Their gross margin is also quite strong. Gross margin. Remind me what that is again.
It's basically the profit they make on each product after accounting for manufacturing costs.
Okay, so they're making money on what they're selling. That's a good sign, right?
It is. But of course, there's more to the story than just a couple of numbers. To really understand their financial health, we need to look at other key metrics. Things like operating margins, net income cash flow.
All right, so sounds like we've got some more digging to do.
We do, but we'll save that for part 2.
You got me hooked. We've got the basics of their business, a glimpse into their leadership and strategy, and a taste of their financials. We'll be right back to dive deeper into Marvell's numbers, and trust me, you won't want to miss it. Stay tuned. All right, so we're back. And before the break, we were just starting to get into those Those financial metrics for Marvell.
Yeah, the nitty-gritty numbers.
Exactly.
Yeah.
So you mentioned gross margin earlier,
Mhm.
which sounded pretty healthy. But what other numbers should we be paying attention to?
Well, their operating margin and their net margin haven't been as impressive lately. In fact, they've even dipped into negative territory recently.
Negative margins. That doesn't sound so good. Should we be worried?
Not necessarily. It's important to understand why those margins have shrunk. Part of it is due to increased operating expenses.
Okay.
They've been investing a lot in research and development, which, is essential in such a fast-paced industry.
Yeah, you got to stay ahead of the curve.
Exactly. And they've also had some restructuring charges, which can actually be a positive sign.
How so?
It could mean they're streamlining operations for better efficiency down the road.
So it's like taking a short-term hit to set themselves up for long-term growth.
Precisely. It's a classic case of spending money to make money. But of course, it's something to watch closely.
Right. If those margins stay negative for too long, that could be a red flag.
Exactly.
Okay. So besides profitability, what are some other metrics that give us a sense of how the market views Marvell?
Well, their price-to-earnings ratio, or PE ratio, isn't really applicable right now.
How come?
Because they've had those recent net losses. But once they swing back to profitability, that ratio will be a key indicator of their valuation.
Okay, so PE ratio's on hold for now.
Yeah.
What about dividends? Are they sharing their profits with shareholders?
They do offer a dividend, but it's currently pretty small, yielding just 0.19%.
Okay.
And their payout ratio isn't really meaningful at the moment because of those negative earnings.
So not a dividend superstar right now.
Not exactly. But again, that could change if their financials improve.
All right, so we've covered profitability, expenses, dividends. Anything else we need to look at before we move on from their finances?
It's always wise to check out their cash flow statement.
Cash flow statement. What does that tell us?
It shows how much cash the company is generating from its operations, investments, and financing activities.
Okay.
Strong cash flow is crucial for any company,
Yeah.
but especially in a volatile industry like this one.
Right, you need that cushion to weather the storms.
Exactly. Luckily, Marvell has a history of solid cash flow generation, so that gives them some flexibility.
Okay, that's good to hear. So I think we have a pretty decent grasp on their financial situation now. But what about market sentiment? What's Wall Street saying about Marvell?
The overall sentiment seems quite positive.
Really?
Yeah, analysts have given it a moderate buy rating, and there's a lot of buzz around their potential in the AI and data center markets.
Okay, but we know the semiconductor industry overall has been a bit shaky lately. So what specifically about Marvell is driving this optimism?
Well, their specialized chips are definitely a big draw. Those system-on-a-chip devices we talked about earlier,
Just those seats.
right? They're a perfect fit for the growing demand for high-performance computing in those markets.
Makes sense. Data centers and AI need a lot of power.
Exactly. Plus, their partnership with AWS gives them a real advantage in the cloud computing space.
That's right. They've got those connections.
Analysts seem to believe they're well-positioned to capitalize on some major growth trends.
So they've got the right products at the right time.
It seems that way.
That's promising. But of course, behind every public company, there are people making decisions influencing the direction of the business. Who are the key players holding the reins at Marvell?
Well, one thing we're seeing is a high level of institutional ownership.
Institutional ownership, what does that mean?
It means big investment firms, pension funds, and other large institutions hold a lot of the company's shares.
Okay, so what does that tell us?
It suggests that these institutions, who have a lot of resources and teams of analysts, see Marvell as a solid long-term investment.
So they're betting on their future growth potential.
Exactly. They're not just looking for a quick buck.
Interesting. Okay, what about insider ownership? Are the company's executives and employees buying up stock?
Well, that's actually pretty low at Marvell.
Is that a bad sign?
Not necessarily, but it's something to note. It could just be a coincidence, or it could mean that insiders don't see the same level of upside potential as those big institutions.
That's an interesting point, something to consider for sure. So we've talked about their financials, their market position, but we can't forget about the risks. Every investment has them. What potential pitfalls should we be aware of with Marvell?
You're absolutely right. Let's do a quick SWOT analysis to really lay it all out.
SWOT analysis, I like it.
Yeah.
Strengths, weaknesses, opportunities, and threats.
Exactly. So let's start with their strengths. What do you think is their biggest strength?
Well, from what we've discussed so far, I'd say their expertise in AI and custom silicon design seems like a major advantage.
I agree. They're leading the pack in a really high-growth area.
Right. But even the best companies have weaknesses. Where could Marvell potentially stumble?
One potential weakness is their dependence on a few large customers.
Oh yeah, that can be risky.
If those relationships go sour or those customers run into trouble, it could have a big impact on Marvell's bottom line.
So they're a bit vulnerable if they put all their eggs in one basket.
Exactly. They need to keep diversifying their customer base to spread out that risk.
Makes sense. Okay, so we've covered strengths and weaknesses. Now for the fun part. What are some exciting opportunities for Marvell?
Well, that rapidly expanding AI and custom integrated circuit market is a huge opportunity.
Right, they're already well positioned there.
They are. But they can't afford to rest on their laurels. They need to keep innovating and developing new products.
It's like they're riding a wave, but they need to stay ahead of the crest.
Exactly.
All right. Last but not least, the threats. What are some potential dangers for Marvell?
Well, competition is always a threat, particularly from Asian ASIC suppliers.
Right, that market is incredibly competitive.
It is. And then there's the inherent volatility of the semiconductor industry itself. Demand can fluctuate, prices can get squeezed.
And things like a global recession or a slowdown in tech spending could hurt them too.
Absolutely. It's a complex and constantly changing landscape.
It sounds like it. I'm feeling a lot more informed, but I gotta say, I'm still not sure whether to buy, sell, or hold the stock.
Nah, don't worry, we'll get to that. But first, we have one final thought-provoking insight to share. Something to ponder as you weigh your decision.
Okay, you've got me intrigued. What is it? Okay, lay it on me. What's this final insight about Marvell?
Well, we've talked about their financials, their market position, their strengths and weaknesses, but there's one thing we haven't really touched on, their sustainability initiatives.
Sustainability.
Hmm.
I would normally think of a semiconductor company as being particularly eco-conscious.
You might be surprised Marvell is actually quite committed to sustainability.
Really?
Yeah. Their strategy is built around three main pillars: a thriving organization, sustainable products, and a responsible supply chain.
Okay, so they're not just focused on making chips, they're thinking about the bigger picture too.
Exactly. They're taking concrete steps to reduce their environmental impact. They're promoting ethical sourcing of materials, and they're even designing products that are more energy efficient.
So they're trying to be good corporate citizens.
Right.
While still innovating in a cutting-edge field.
Precisely. And this commitment to sustainability isn't just about doing the right thing, it's also a smart business move.
How so?
More and more investors are factoring in environmental, social, and governance considerations into their decisions.
ESG.
Exactly. Companies with strong sustainability practices are seen as less risky and more attractive for long-term investment.
So Marvell's sustainability efforts could actually give them a competitive advantage.
Absolutely. It's something that could sway investors who are looking for companies that are both profitable and responsible.
That's a really fascinating insight. I have to admit, I never would have thought that sustainability would be such a key factor when analyzing a tech company like Marvell.
It just goes to show you there's always more to the story.
Right, you got to look beyond the surface. So after all this digging, what's the final verdict on Marvell? Is it a buy, a sell, or a hold?
Well, they're a major player in a high-growth industry. They've got a solid financial foundation, and they're making some smart moves. But as we've discussed, this industry is inherently volatile.
Yeah, no shortage of risk there.
Exactly. So it really comes down to each individual investor's assessment of whether the potential rewards outweigh those risks.
Right, it's all about finding the right balance for your own portfolio. Well, I think this deep dive has given our listeners a lot to think about.
I hope so. We've covered a lot of ground today, from their financials to their market position to their sustainability efforts. It's all crucial information for anyone considering investing in Marvell Technology.
Absolutely. And if you're looking for even more in-depth analysis of the stock market, make sure you subscribe to the Stock Analytics AI YouTube channel. We break down complex financial topics in a way that's both informative and hopefully a little bit entertaining.
And don't forget to leave your questions in the comments below.
But before you go rushing off to buy or sell any stocks, remember, this is all for informational purposes only and not investment advice. We use AI to help us gather and process information, but ultimately our analysis is based on human judgment. Investing in the stock market always carries risks, and it's essential to consult with a qualified financial advisor before making any decisions.
We'll be back soon with another deep dive into the fascinating world of finance and technology. Until then, happy investing, everyone.